In this session, we're going to look at inheritance tax that's payable at death on lifetime transfers. Now, inheritance tax payable on death consists of three things. First of all, we have any additional tax that's payable on chargeable lifetime transfers made by the deceased person during the 7 years ending on the date of death. We also have tax payable on potentially exempt transfers that are made by the deceased person during the same 7 years. And we have tax payable on the value of the estate of the deceased person at the date of death. Now, we will look at how we calculate inheritance tax on the first two of these points in this session, and we'll look at the third in a separate session. So how do we go about calculating any inheritance tax on chargeable lifetime transfers and potentially exempt transfers? Well, what we do is we deal with these types of transfers in chronological order. We make no distinction between the two different types. And we calculate the tax on the gross value of each transfer using the inheritance tax bands and tax rates in force at the date of death. So in 2016-17 we had a nil rate band of 325,000 and the inheritance tax rate was 40%. We calculate the tax on each transfer separately because it might then be reduced by taper relief. Now, taper relief reduces the amount of tax payable on older gifts. So as the gift gets older and older, the amount of tax that's payable falls. Finally, if inheritance tax was paid on a chargeable lifetime transfer during the person's lifetime, that tax can be deducted from the inheritance tax on the death of the individual for that transfer. Now, this can either leave an additional amount of inheritance tax to pay in respect of that transfer, but there can be the situation where the lifetime tax that was paid at the time of the transfer exceeds the liability on death. In this situation, no additional tax would be payable, but unfortunately no repayment of the excess would be given. Earlier I mentioned taper relief, and this reduces the inheritance tax on lifetime transfers, and it's given in the following rates, and all of these are given to you in the exam itself. So for transfers that are within 3 years of the death, there's no reduction. Between 3 and 4 years it goes to 20% and then builds up to 80%. Now, if it's the case that we have a transfer that's more than 7 years, that is irrelevant because we ignore transfers older than 7 years. So let's have a look at an illustration. Let's say that Ferdy dies on the 12th of November 2016, and the only transfers that Ferdy has made during his lifetime were as follows. Back on the 1st of February 2003, he made a gift to his son of 50,000. Then on the 20th of December 2009, he made a gift to a trust of 500,000, and at that point Ferdy paid inheritance tax on that transfer of 42,250. And finally, he made a gift on the 17th of July 2011 to his daughter on her marriage of 50,000. Well, first of all, we make sure that all of those gifts are within 7 years of the date of death. And we can clearly see that the gift to the son of 50,000 was more than 7 years before the date of death, so we will therefore ignore that gift for inheritance tax purposes. The next gift was the gift to the trust, and this is just within 7 years of the date of death. so we have to take it into account. We'll calculate the gross value of this gift, and this is going to be calculated as the amount gifted of 500,000 plus any tax that was paid by the donee, by Ferdy. And we have to take this into account because as a result of that gift there was a reduction in the wealth of Ferdy, of both the gift and the tax that he paid on that gift. But of course we can deduct any annual exemptions or other types of exemptions that could be set against the value of that gift. So we have the gift of 500,000. We'll add on the tax that's paid by the donee, by Ferdy. Please note, if the tax was paid by the recipient of that gift, we wouldn't include the tax value. But as it was, then we'll include it. We'll deduct the annual exempt amount of £3,000 for the tax year that the gift occurred in. That was 2009-10. And we can also deduct £3,000 being the annual exempt amount for the previous year because that was unused. So the gross value of this gift for inheritance tax purposes is £536,250. Next, we'll calculate the gross value of the gift to the daughter on her marriage. So the total value is the amount that was gifted less any annual exemptions that can be set against that gift. We start with the value of the gift. Well, 50,000 was given over to his daughter, but it was on the occasion of her marriage. So there is a £5,000 marriage exemption for parents giving gifts to their children as a result of marriage. In addition to this, Ferdy will also have an annual exemption for 2010-11 of £3,000. Now unfortunately he can't also use the annual exempt amount for the 2009-10 year because that's already been used against the gift that was given to the trust. So it's just the current year that he would be able to claim. So the gross value of that gift, that 50,000 to his daughter, for inheritance tax purposes is 42,000. Now that we've done that, we'll calculate the inheritance tax on that oldest gift. Now if you remember, the gross value was £536,250. Of that, the first 325,000 will be taxed at 0%. This is the nil rate band. The balance will then be taxed at 40%. So that works out at £84,500. So the total, before we take into account taper relief, is £84,500. We can then deduct taper relief, and here we've got to work out how many years how many years there were between the date of the gift and the date of death. And in this example, it's between 6 and 7 years. If we go back and look at the taper relief applying to a gift that's 6 to 7 years old, that is 80%. So taper relief will be 80% of that £84,500, and we can deduct that from that tax, leaving inheritance tax payable on this gift of £16,900. But of course, there has already been lifetime inheritance tax paid of £42,250, and as that exceeds the £16,900 inheritance tax at death, there will be no additional tax to pay on this gift. Unfortunately, however, the excess that's been paid of £25,350 cannot be reclaimed. So that, I suppose, to some extent has been lost. Now that we've calculated the inheritance tax on the oldest gift, we'll then calculate the tax on the next oldest gift. Well, the next oldest gift was the gift to Ferdy's daughter, and we've already calculated that the gross value of this for inheritance tax purposes was £42,000. Now the nil rate band of 325,000 has already been used up against the gift to the trust, so all of that 42,000 will be taxable at 40%, and that's 16,800. There will, however, be some taper relief because the number of years between the date of the gift and the date of death was somewhere between 5 and 6 years. So here we can apply taper relief of 60%. So 60% of that 16,800 can be deducted from the total inheritance tax, leaving an inheritance tax liability at death of £6,720. Our next question is, who pays this inheritance tax that's payable at death on lifetime gifts? And it's actually paid not by the estate but by the transferee, whoever received that gift. So if we think about our illustration, it would be Ferdy's daughter that would be expected to pay the inheritance tax of £6,720. Now sometimes we have the situation where a transferee cannot or doesn't pay the inheritance tax. Well, in this situation, HM Revenue and Customs will be able to go back to the estate of the deceased person to collect any additional tax, but in the main it comes from the transferee.